What's up, everybody? It's Jimmy with Trading Decoded. It is June 12th, 2024. It's 4:02 in the afternoon. The market's closed. FOMC day. A very tame one at that. And I think that's because the market didn't get any surprises. That was probably the least amount of movement that I can remember seeing on an FOMC report day in quite some time. In fact, the biggest move of the day prior to the pre-market or post pre-market move was as soon as he walked away. We sold off a bit and then kind of closed right back where the market had settled right before 2 o'clock, which is kind of standard issue when the market is not caught off guard. But we found a couple of trades to take earlier in the day, which is the best time to trade on FOMC days, if at all. We warned everybody before the market opened and even yesterday that you were going to get some sticker shock today. Contracts are very, very expensive in FOMC days, okay? And what a lot of people tend to do when they see the prices of those contracts is play further out of the money. The problem with that is that you become subject to being affected more by IV crush, okay? So we had a massive move up in pre-market because of some reports this morning. And that move right there catapulted us. We were going to open at all-time highs as it was, and then we just catapulted into the stratosphere of ultimate all-time highs, okay? This is not a good feeling for me personally. Now, I normally start my charting at 8:30, but because I knew we had reports, I wait till after 8:30 so that the market can settle a little bit. Now, the problem with, and we just made a video on this not too long ago, charting when you're near all-time highs is you've got no point of reference for targets, okay? That's an uneasy feeling for me as well. So, pre-market, we had a pre-market low, pre-market mid, pre-market high, just like we always do, and they came from these candles right here. I had drawn these lines again right around 8:35, 8:40, and where they came from this time was taking the distance between my pre-market levels and just duplicating it to the upside, okay? Basically 50% levels between my pre-market high and pre-market low. I found the halfway spot and worked my way up. And ironically and eerily enough, well, they acted as decent support resistance levels, having never had them there before and never having ever had them tested. I was pretty surprised as to how well they did. Now, after the sticker shock sets in, the other thing we have to keep track of, and it's very hard to do for a lot of people, including myself, is be comfortable buying calls when you're up here, okay? And the reason that we feel that way is because I can ask you one very simple question. That question would be, how many of you look around in your day-to-day life and think that the economy is doing great, it's booming? Now, when I asked that question in my community, not one person said, well, yeah, Jimmy, the economy is great. And that's because you and I don't feel like it is. Why do we feel that way? Well, because we're living on credit cards, our debts are high, the cost of living is through the roof. I mean, it's not great, right? It's not great. So when we feel that way, we tend to believe that the market has no business putting in all-time highs while we're personally feeling like it shouldn't be. That's normal. Okay, and it's a feeling that a lot of people have. So don't be upset at yourself for feeling that way. What you've got to do, though, and it's difficult, is trust the technicals in this respect. If you cannot, because I had people do it all day today, if you cannot get yourself comfortable with the idea that the market can go higher, i.e. you can't be okay buying calls, it doesn't mean that you should buy puts instead. The market was screaming to the upside today. Everything that we look for, I have 5 rules that if they're all true, you definitely don't want to be buying puts or even considering them. If the ADD is above 1500 or higher, we started at 1600 and immediately on the first candle got over 2000. If your heat map is more green than red, it was definitely more green. If your top 10 is green, definitely everything in the top 10 was green. If the trend was moving up, the trend was definitely moving up. Everything that we need to see to take puts off the table was there, which limits your possibilities of a trade to calls. So then you've got to find out and determine what's a good enough reason or when's the right time to buy those calls. Now, as I said before the market opened, guys, the market is so happy that I wouldn't be interested in puts near the open unless we can have a nasty pullback all the way to 540.55, our pre-market low line, with a close below it. It never even thought about the idea of doing that. So puts were not a thing. Okay? Now, calls. I didn't want to put a line on the chart because if we opened up here and then broke right into all-time highs, I can't do that and I don't feel comfortable doing it, so I won't recommend other people think about doing it. So, hypothetically, we would have taken calls above the yellow line. I told everybody, guys, I'm okay playing calls, but I won't do it until I see some kind of a pullback first to see how the buyers react to the pullback. Now, that pullback happened right at the open. Okay, now Qs started to move up well before SPY did. And ADD instantly started to move up. So it was a little weird to see SPY struggling to move up, even though ADD and Qs were already making the move. But that's okay. So we were slowly moving down. We found solid support down here. Telling me buyers are holding on strong. And once we started to get up in here and saw the Qs come off of a higher low, I'm good. It's a go, guys. It's a go. Where are we looking to go? Well, let's see if we can get the Qs up to their next level of resistance. Okay, now at the time, we only had these first three yellow lines on the chart. Okay, so I told everybody, guys, I'll be aiming for 542.90. I don't know if it's going to get there. It's never been there before. Okay, it's never been there before. It's never been to this yellow line before. It's never been to this yellow line or any other one after that. So we got no proof of where sellers might try or profits might start to be taken. We don't know. So all we can do is trail our winnings, meaning if we're moving up, which there was no reason to believe it can't go higher. We're literally watching everything print green. Guys, just hang on. Slide your stops up so that if it does pull back or reacts or we don't make it to where you think it's going to go, you still get out in profit. Okay? That's all you can do. So we got in, we got out here. Now, while we crossed the second line, I added additional lines there, not knowing how far it was going to go, which one was going to be the final one it got to, which one was going to hold, which one doesn't hold. You'll never know that, so there's no point in trying to figure it out. All you know is that, hey, if you buy calls here on a pullback during an uptrend, which is what you should be doing, we should expect at the time to make it back to the resistance that we just came from. That's your trade, from support to resistance. But then we started to put in higher lows. I said, for those of you who are still in your calls, higher lows are bad for puts, which means it's good for calls. I believe that this yellow line is going to fail to the upside, meaning we're going to get through it. Why? Because higher lows tell me that the buyers are getting stronger. So if the buyers are getting stronger and everything else is still pushing up, why wouldn't it go up? So we get up to resistance again, close above it, and right up to the next one we go. Followed by more higher lows, right up to the next one we go. And this one was a higher low, and yes, it did break, but we found a new resistance, and this ended up being the high of day. Okay, if I'm not mistaken, 543.95. No, we actually made a higher high later in the day with Jerome Powell. But at the time, all-time highs, and then we came down. Now, people are itching to take counter trend trades. People are itching to take puts. Guys, at least wait for the Qs to break support, at least wait for SPY to break support, and then always, always aim for the very next support down as your profit target. When you are counter trend trading, don't try and catch a reversal. Catch the pullback. So if we know where the pullback is likely to take us, consider that being your profit target. For you to trade against the entire market, be fortunate that you got in for a reason because we broke support, expect it to run down to the next support, and when we get there, take your profits. Yes, it might break that support and continue down, but it also might bounce right off of it and stop you out for a loss or way less profit. Okay, on an uptrending day like it was today, on a very happy market day, this is not the time to hold on to your counter trend trades. Okay, so we found two worthy of taking because of breaks of support, either on Qs and or SPY or one or the other. Okay, so these were the only two puts on this chart today that we talked about. And then we got into a pretty slow, tight range. Now, we discussed, I was going to go to lunch at 12. I left right around 12:15, and we agreed that we'd come back at 1:45 so we could watch the fireworks, right? So we come back at 1:45. Yeah, we had a little bit of movement, slow. You know, it's too expensive to play this on days like today while holding in chop. Okay, it's just too expensive to take the risk, in my opinion, but it's your money. You do what you want to do. As we lead up to 2 o'clock, we remind everybody, guys, we have no idea which way this is going to go, up or down. It doesn't matter. It's going to go somewhere. We just don't know which way. But if the market doesn't get surprised, meaning we don't hear anything it's not expecting, meaning rate cuts or rate hikes or anything like that, it's usually likely to be at or near where it was at 159 shortly thereafter. Meaning 159, you get the reaction from 2 o'clock, and then look at where it comes right back to. It's like the average comes right back to here. Okay. Yes, we dipped down. Yes, we came back up. We got up above a little. We came back down a little, up above a little, down a little. But it feels like it wanted to stay right here at this 542.56. All right. Then we get a move down. Jerome Powell starts talking at 2:30. Very, very, very tight range for FOMC traders out there. This was the tightest range I can remember on an FOMC day, but it makes sense because, again, the market's priced in what it believes is going to happen. The Fed didn't say anything that makes it think that that's not possible. And here we are. Now, the biggest move of the day came as Jerome Powell, not of the day, but in post 2 o'clock, came while Jerome Powell was answering his final questions. And then as soon as the guy closed the book and walked away, we took a drop right down to our put line, which we never closed below. This line down here, whether it was the Qs or SPY being the reason, that was a solid level of support that did not want to be broken. And I'll tell you, it's very interesting that pre-market low line happens to be where all the buyers stepped in right after that big candle push up in pre-market. So this was the report candle. We came right back to that line, held it as support, back to the line again, held it as support, never to be seen again. There's a ass load of buyers hanging out right there in that zone. So be prepared for that and watch out for it tomorrow. But that's pretty much it, guys. So we didn't take any trades late in the day unless you were gambling. And guys, on FOMC days, if you want to play that 2 o'clock candle or something like this at the end of the day, please play it as the gamble that it is. Okay, you can make a lot of money, but you can also lose a lot of money. I wouldn't use your full position size. I wouldn't use deep in the money. I wouldn't use anything expensive or that you can't afford to lose all of. Today, we had some guys trying to make this trade, having fun. We had people make over 100% on this move down. Had one guy, you know who you are, refused to sell it, even though we've made it very clear it was struggling to move down. He was up over 60% at this time, ended up closing the trade for zero. He made nothing. The trade was red, completely red. And then we say, oh, it was just a YOLO trade. That's fine, but you're still $180 poorer than you were before you decided to give up perfectly good 60% profit to do that. Guys, that messes with your psyche. Not only that, it takes away from your account balance. And whether you think that's $180 is a big number or not is irrelevant. It's a red that you're going to see on your trade log. It's a minus you're going to see in your balance. It'll live in the back of your head. for as long as you continue to do this. All right. So with that said, I hope you all did okay today. I also hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's links down below. For those of you who are in our community and you don't have your alerts turned on or at everyone notifications turned on in Discord, we are going to be offering the annual discount coupon code Friday. Okay, so for those of you who are out there currently on the annual membership, please cancel your current one. And if you're choosing to stay with us, re-sign up on Friday with the coupon code. From that point forward, until you cancel, it will automatically renew you at the discounted code. We are at the discounted price. We're also turning on, because it's just new available to us through WAP, buy now, pay later. So you can, if you choose to, make those payments for the annual subscription over time. And that's pretty much it. So hopefully tomorrow gives us some proven levels of support and resistance. Hopefully we open lower than where we reached all-time highs at, because I just feel better plotting my charts with that. And hopefully you guys did well. But until tomorrow, I love you guys. See ya!